Deal making is expected to show new signs of life this year. Morgan Stanley making the call that M&A activity is set to rebound not only in 2024, but in years to come. For more on the M&A comeback, we've got Andrew Sheets, who's the Morgan Stanley Chief Cross-Asset Strategist. Andrew, great to have you here on with us on Yahoo Finance today. First and foremost, what is really kind of the invigoration behind this and the M&A forecast?
Yeah, great. It's great to be here. So I think there are both cyclical and structural drivers that are going on here. If we think just about, rebounding from last year, deal making activity in 2023 was exceptionally low, relative to the size of the economy, maybe the lowest that we've seen in 30 years. And so there's some important catch up as I think we see from markets increased confidence in a soft landing and a better economic outcome. That's going to catch up to corporate boardrooms. But there's also a longer term picture here that's quite exciting. There's activity that we think private equity players need to do. There are other forces that we think will be making up for multi-year deficits. And there's some interesting regional trends. So this isn't just about a one-year catch-up. We also think this is a longer term story.
Andrew, if we don't see the Fed, though, cut rates before the end of the year, how much is that going to then delay the recovery that you're expecting?
So I think it really depends on what is the economic environment behind that delay. I think if the Fed is not cutting rates this year because the economy is even stronger than expected, I think that could peacefully coexist with more M&A activity as corporates get increasingly confident about the economic backdrop, as fears of recession recede even further. And then importantly, we do think many private equity investors, the average kind of amount of time their portfolio companies have been on their books remains historically high, that they will kind of face pressure to act kind of regardless of what the Fed is doing. So I think it can still survive that sort of scenario. Now, if inflation's high and that's the reason why the Fed has not been cutting rates, that could be a bigger challenge. But I think if the Fed isn't cutting because growth is better than expected, we'd still think M&A recovers.
For investors out there that are trying to pick and choose or get ahead of some of the biggest M&A opportunities, where are the sector hotspots that they should be perhaps keeping a close eye on?
So I think there are a couple of places. I think there are the usual suspects like healthcare and technology. Real estate's an interesting one, and that's also a sector where our analysts see lower regulatory hurdles to M&A than other sectors. And as part of our work, we really leaned heavily on Morgan Stanley's global team of equity analysts to really kind of dig into a lot of these themes. And there's some really interesting regional stories as well. We think M&A, which has been in a huge, almost decade-long drought in Europe, is picking up in a big way. That's actually the region where Morgan Stanley equity analysts are most optimistic on more M&A activity versus consensus. So I think that could be one of these factors where sentiment on Europe is certainly lower than other regions, but where M&A activity, I think, is more likely to surprise positively.
Andrew, the pushback that we've seen on the regulatory side, the crackdown on antitrust, is that at all going to have more of a freeze or maybe chilling effect on the M&A pipeline?
So I think that is a really important factor to flag. I think that's one of the risks to this rebound. But when we sit down with our analysts and we think through these issues, those regulatory forces first, I think, differ some depending on what sector that we're looking at. Two, I think when we ask our analysts holistically to think about the risks, even factoring in the regulatory risks, 50% of our industry teams globally still see M&A increasing. And then also we think that this is an area where, under either of the likely presidential outcomes, we think companies could ultimately get more comfortable activity. The companies have now have a more experience with the Biden administration and their approach to M&A. There would have been previous experience with the Trump administration's approach to M&A. So these might be bumps, but we don't see regulation as a major impediment to this multi-year rebound.